Are you ready to unlock crucial insights before making your next investment?
That's right. Join experts Emily Brown, John Stevens, and Carter Worth as they unravel the complex layers of today's market dynamics.
In this compilation, we've distilled their deep analyses into concise, actionable summaries, thanks to AI technology.
Whether you're navigating COT data or preparing for volatile earnings, these insights will save you time and help you trade smarter.
Stay tuned as we delve into predictions that could shape your financial future. Today, we're delving into the analysis of how to use CO data for stocks and ETF trading.
Emily highlights the crucial role of CO data in understanding market sentiment and positioning.
Emily Brown emphasizes that COT data provides insights into how large traders are positioned in the market.
This positioning can indicate potential market movements, which traders should consider in their strategies.
According to Emily Brown, understanding market sentiment is critical, as it often predicts price movements.
COT data reveals whether traders are bullish or bearish.
Emily suggests that traders can refine their strategies by incorporating COT data into their analyses.
This approach allows them to stay ahead of market trends and make informed decisions.
What does Emily Brown predict about market movements based on COT data?
She forecasts that shifts in trader positioning could signal increased market volatility ahead.
Emily Brown concludes that regular monitoring of COT data is essential for traders to understand market sentiment.
By doing so, they can make more informed trading decisions and potentially capitalize on upcoming market movements.
Today, we're looking into the ongoing cash shortage with insights from our guest expert on Eurodollar University.
This shortage is indeed affecting how consumers are spending their money, and it's influencing overall market sentiment.
The expert points out that we are facing critically low cash availability, which poses challenges for economic recovery.
The reduction in cash flow can hinder businesses from meeting consumer demands, which complicates efforts towards economic recovery. The expert mentions that consumers are indeed changing their spending habits due to the current cash situation.
As a result, retailers are confronting difficulties with cash transactions, which could lead to lower sales. The expert suggests that the cash shortage might prompt investors to rethink their investment strategies.
This could in turn lead to a decrease in future investments and potentially slow economic growth.
What are the predictions regarding the cash shortage moving forward?
The expert warns that without intervention, we could see a deepening crisis leading to sustained economic challenges.
To tackle this issue effectively, the expert advocates for prompt policy actions aimed at mitigating the cash shortage.
Moreover, it's advisable for consumers to reassess their financial approaches in light of the ongoing economic changes.
We're diving into David Rosenberg's insights on the market and the need for liquidity.
Rosenberg warns that all market bubbles eventually burst, pointing out associated risks.
Rosenberg stresses that prioritizing liquidity is vital for investors.
This strategy allows quick action during market fluctuations. Rosenberg highlights the significance of recognizing market patterns.
Indeed, he cites common signals indicating forthcoming corrections.
What strategies does Rosenberg suggest for handling potential volatility?
He advocates for cautious strategies to prepare for downturn risks.
What does Rosenberg predict about the market's future?
He predicts heightened volatility, urging vigilance regarding economic signals.
To sum up, Rosenberg stresses the need for liquidity in dynamic markets.
He emphasizes the importance of staying well-informed to adeptly navigate downturns.
Today, we're discussing the current market analysis with our expert guest, Emily Brown.
Emily highlights the challenges equity markets face, particularly regarding valuations and potential corrections.
Emily Brown argues that stock indices may be overvalued, indicating a possible correction ahead.
David Lynn notes that shifts in investor sentiment greatly impact stock market trends.
What insights does Emily have about rising treasury yields?
Emily explains that rising yields typically lead to higher borrowing costs, affecting economic growth negatively. Emily notes that there are bearish developments in major indices such as the S&P 500 and NASDAQ.
How should investors respond to these patterns, according to David?
David stresses the importance of awareness regarding these bearish trends for informed investment choices.
What is Emily's outlook for the market in the coming quarters?
Emily predicts a possible correction in equity markets of around 15 to 25% due to persistent volatility.
Emily advises investors to keep a close eye on Treasury yields, given their impact on borrowing costs.
David adds that understanding technical indicators and market dynamics is essential during such volatile times.
Today, we're diving into Amazon's recent announcement to cut 600,000 jobs, featuring insights from economic analyst John Stevens.
John highlights that these layoffs are indicative of broader economic pressures and potential recession signals.
John Stevens asserts that layoffs like those from Amazon can significantly raise unemployment rates, hinting at potential economic troubles ahead.
He insists that these cuts are common indicators of businesses responding to decreasing demand. John notes that mass layoffs lead to elevated unemployment rates, complicating recovery efforts.
So, if these trends continue, former Amazon employees could face significant challenges.
Absolutely, this situation could prolong difficulties for those searching for jobs.
John points out that dips in profits, like those Amazon is witnessing, typically lead to job cuts as companies aim to cut costs.
This sets off a chain reaction that raises concerns about a recession.
What economic predictions does John Stevens have following these job cuts?
John expects that we could see sustained increases in unemployment over the next year as companies adapt to new economic conditions.
How will consumer habits evolve during this time?
He mentions consumer spending is likely to stay cautious, adding difficulty to economic recovery efforts.
John concludes that addressing the impact of layoffs requires targeted investments in job training for those affected.
Support for local businesses will play a crucial role in fostering recovery.
Overall, keeping a close eye on key economic indicators is essential during these turbulent times. Today we're discussing Carter Worth's insights before significant earnings reports.
Carter highlights potential volatility based on recent market trends.
Carter Worth expresses heightened expectations surrounding upcoming earnings.
He notes that volatility might rise as investors react to earnings results. Carter discusses how recent technical patterns may suggest caution for traders.
He emphasizes the need for awareness of changing market sentiments. Carter indicates that earnings results could heavily influence market trends.
These earnings are critical not just for the companies, but for the entire tech sector.
What does Carter predict for tech stocks after the earnings reports?
He anticipates significant price fluctuations based on investor reactions.
Carter suggests that investors prepare for potential market volatility.
He advocates for focusing on data and technical indicators for strategy.
What an enlightening discussion we've had today, covering so many crucial aspects of our economic landscape.
Indeed, the perspectives from Carter Worth, John Stevens, Emily Brown, David Rosenberg, and our economy expert really painted a vivid picture.
It's striking that they all agree on the sensitivity of the current market conditions, but there were some fascinating disagreements.
Right? For example, while Carter is optimistic about the tech sector's trajectory, John raised pretty alarming points about potential recession risks.
Exactly. And let's not forget Emily's emphasis on rising yields, possibly leading to a market correction. Definitely hot takes.
And Rosenberg's focus on liquidity adds another layer, stressing how important it is for investors to remain vigilant.
If you enjoyed these insights as much as we did, make sure to give us a thumbs up and subscribe.
Your support helps us bring more in-depth analyses from various experts, so you won't miss out.
Join us next time, where we'll dive deeper into the impacts of global trade dynamics on local markets.
You really won't want to miss that. Plenty more thought-provoking discussions to come.